The stock of the day, though, has to be Ola Electric, because the stock has soared to another another high level, and in fact, up about 20% on an upper circuit in trade after entering into electric motorbike segment amongst a slew of launches as well. Now, before I get to a conversation that our colleague Rishabh had with Bhavish Aggarwal, Dipan Mehta, it's a stock that the naysayers say was expensive at the IPO price and has now become even more expensive, right? Nearly double, or if not double, at least gone 75% from that issue price of 76. What explains this frenzy for Ola?
2 words only: bull market. This is a bull market. Anything can happen over here. And stocks have no highs or levels like that. Ola Electric can go to even 200 rupees. So it's just liquidity pouring into the stock. It's not fundamentals that play over here. And such kind of rally cannot be justified on a fundamental basis. But look, this is what happens when there is euphoria, when there is concentrated buying, when there is few investors chasing a stock. This is what happens. The liquidity goes off from the counter, and then even a little bit of buying can take the stock prices higher.
If you had bought into this IPO, Dipan, and very well it could go to 200, but if left to you, if you had gotten it, would you sell into this uptick right now?
I'll give a pass on that one because I haven't got any allocation or I haven't invested. But look, all these companies, even the earlier round of new age companies which went public, they had the similar euphoric type of listing. Then 3-4 quarters, 1 year down the line, there was great disappointment. And now I think they have bottomed out and starting to rally, the likes of, say, Zomato or Paytm, Nykaa. These companies only had a steep correction as well after a very solid listing. I suspect something similar can happen to Ola Electric as well. That right now I think it's just the euphoria around a good listing. But let 2-3 quarters come. It's not that easy for the company to just go from such a huge loss to profitability. Eventually, analysts will start valuing this business on its growth potential, on its profitability. And unlike some of the other new age businesses, the ones which I named, it has a very high component of variable expenditure. So it's just that the turnover may keep on rising. Doesn't mean that the profitability also will improve significantly because a lot of the costs are variable in nature. So I would say that at least I wouldn't advise buying at these levels. If you got an IPO listing, I mean, it's your call whether you made enough, whether you have more appetite for risk or it's better to book profit. That's a difficult one to answer because, again, the stock can rally by another 20% tomorrow. And then you may feel a bit disappointed that you have sold out early because it's not going up on fundamental basis at all.